Hey traders, welcome back to AFTechTrades. Today, we are diving into a topic that's on everyone's minds, the next big market crash. You might be wondering, how can I protect my investments and even profit from such a downturn? Well, stick with me because by the end of this video, you'll have a solid strategy to shield your portfolio and take advantage of market volatility. Before we jump in, make sure you hit that subscribe button and turn on the notifications so you don't miss any of our trading tips. If you find this video helpful, give it a like and share it with your trading community. Let's talk about what a market crash actually is. We are talking about a significant drop in asset prices across major markets, often driven by economic downturns, inflation, or unexpected global events. Remember the 2008 financial crisis? Or the dot-com bubble? These crashes are inevitable, but they are not something to fear if you're prepared. Most investors lose their cool and panic sell, but smart traders see opportunities where others see chaos. The question is, will you be ready when the market crashes? Now, how can you protect your investments when markets start to tumble? Here are a few ways. 1. Diversification. This is your safety net. Don't put all your money into one asset class. Spread it across stocks, bonds, commodities, and even crypto if you're comfortable with that level of risk. Diversifying lowers the impact of a crash on your portfolio. 2. Safe haven assets. During crashes, assets like gold and government bonds tend to hold their value or even rise. These are called safe havens, and they act as a buffer during market declines. 3. Hedging with options. If you're a bit more advanced, using put options or inverse ETFs allows you to profit as the market falls. Think of it as insurance for your portfolio. 4. Emergency cash fund. Always have some cash on hand. This will not only give you peace of mind but also allow you to buy undervalued assets when the market bottoms out. Now let's talk about making money in a crash. Yes, you heard that right, there are ways to profit even when the markets are tanking. 1. Shorting the market. This is where you sell a stock you don't own, expecting the price to drop. When it does, you buy it back cheaper, making a profit on the difference. It's a more aggressive strategy but can be highly effective in a downtrend. 2. Buying put options. Another way to capitalize on falling prices is by purchasing put options. This gives you the right to sell a stock at a certain price, and when the market drops, you profit from the price difference. 3. Inversely correlated assets. Look into inverse ETFs or assets that tend to rise when the market falls, like the VIX index. This can serve as valuable tools during a crash. 4. Buying the dip. For long-term investors, a market crash is often a buying opportunity. Stocks that were once overpriced become available at a discount. But be careful, only buy strong, fundamentally sound assets. Let's take a look at some real examples from past crashes. Check out this chart from the 2008 financial crisis. Notice how the market dropped sharply, but smart investors who bought during the dip saw significant returns as the market recovered. And here's an example of how you could have used put options or shorted certain stocks to profit as the prices fell. As you can see, with the right strategy, a market crash doesn't have to be bad news. To wrap it all up, remember this: market crashes are part of the economic cycle. While most people panic and sell off, you now know how to protect your investments and even profit when the next crash happens. The key is preparation, a clear strategy, and keeping your emotions in check. Here are a few examples of currency charts that are typically considered safe haven assets and those that experience high volatility during market downturns. 1. Gold, XAU/USD. Gold is a popular safe haven asset during market crashes. You see how gold prices spike during uncertain times. 2. US dollar to Japanese yen. The Japanese yen is another safe haven currency. The US dollar to Japanese yen pair often sees significant movement during crises as investors move toward the yen. 3. Euro to US dollar. This is one of the most traded currency pairs and often reacts strongly to global economic events, making it a good indicator of overall market sentiment. 4. Australian dollar to US dollar or NZD/USD. These pairs are risk-sensitive and tend to decline during global risk-off events. And then finally our number 5 on our list is pound sterling to US dollar. The British pound is another major currency that shows high volatility during times of economic uncertainty. If you found value in this video, hit that like button and share it with your trading friends. And don't forget to subscribe to AFTechTrades for more trading insights. Also, join our Telegram community for free signals and trading tips. Link is in the description. Before you make any trading decisions, remember that this is not financial advice. Always do your own research or consult with a financial advisor. Trading involves risks, and it's important to understand the markets fully before jumping in. Thanks for watching, and I'll see you in the next video. Stay prepared, stay profitable.